So home prices in Canada are poised to continue going up into the end of 2023. And in this video, I'm going to go over that projection. And at the end, I'm going to give you my opinion on that projection. So stick around. All right, so we're going to pull up this article here. Home prices to end year 8.5% higher despite Bank of Canada rate hikes, says Royale Lepage. Average price expected to be $821,000 by the end of 2023, up from $757,000 in the fourth quarter of 2022. So, real estate company Royale Lepage has upgraded its forecast for national home prices despite signed sales and prices may be cooling in the wake of the latest Bank of Canada interest rate hikes. The national aggregate home price, calculated from the median of all housing types, is projected to rise 8.5% to $821,000 by the end of the year, up from $750,000 in the fourth quarter of 2022. Royale Lepage said in its market survey forecast released July 13 that is up significantly from the 4.5% increase Royale Lepage predicted in its April survey. So just 4 months later, they are now redoing that projection and saying that it's actually going to go up an additional 4% by the end of the year, when it said prices would end the year at $791,000. Which, by the way, everybody scoffed at Royale Lepage when they initially came out with this projection. Everyone said, yeah, it's just because, realtors just want to make money and they just want to pump the market. So people buy and home prices go higher and they make more money. So either they somehow managed to pump the entire Canadian real estate market with the release of one article, or they ended up being pretty close to being correct on their projection. The previous forecast has been revised upward to reflect strong activity and price appreciation in the first half of the year, the company said in a press release. For the second half of 2023, Royale Lepage expects price increases to slow or rise marginally quarter over quarter as the latest interest rate hikes takes hold. Still, the company said an ongoing shortage of listings and demand from immigration mean pressure on prices will continue to build. Canadian housing markets went on a tear in early 2023. Actual national prices rose from $612,000 in January to $728,000 in May, and national sales leapt according to data from the Canadian Real Estate Association. The renewed activity caught Bank of Canada's attention and contributed to its decision to hike rates again to a 2022 year high of 5% on July 12th, following a surprise increase in June. However, signs of moderation in housing prices and sales have started to appear. June numbers for Toronto slowed a 17% decline in sales from peak of 9,000 units in May, ending a 4-month streak of gains, which coincided with the resumption of interest rate hikes last month. However, prices and sales in Vancouver and Calgary continued to rise last month, their respective real estate groups said. Royale Lepage thinks markets will adapt to a more hawkish Bank of Canada. Despite the Bank of Canada's decision to start raising interest rates again, many buyers are still in the game. Demand remains strong, particularly among those who have secured a rate hold, said Phil Soper, chief executive of Royale Lepage. Buyers who are determined to make a purchase this year have accepted the reality of higher initial carrying costs, rationally surmising that rates are at or near peak and will become more affordable before long. So what are my thoughts on this? Basically, I think they could be right. I think it's pretty much 50-50 at this point. I personally thought listings were going to accumulate over the summer and then come fall. I didn't think that we would see a renewed amount of demand to catch up to the amount of new listings that we saw. And then typically we get more listings in the fall. And if we don't have demand to match that, I thought prices would maybe bleed until the end of the year. And I could end up being right about that. But so far it's not looking very good because new listings are now going down once again, which means lower inventory. Now, obviously, sales are going down too, but if new listings and sales are going down, it doesn't necessarily mean that prices are going to go down. It just means we're going to have a slower market overall, right? So, I mean, even Toronto, new listings are falling off a cliff in Toronto right now. We've only saw a small downtick for our new listings, but typically real estate markets trend until they don't anymore. So, that's could be a trend that happens over the next couple months. We just see new listings decline and then so on and so forth. And here's the thing, right? Even if Vancouver and Toronto don't perform very well until the end of the year, because we're talking about national home prices, Vancouver and Toronto don't necessarily have to perform well. If we just look at Calgary here, pulling up this chart, there's more sales year over year. less inventory year over year. And look at the active listings for Calgary. Active listings are down nearly 36% this time this year in comparison to this time last year. So even if Vancouver and Toronto level out, we're still going to have more affordable markets like Calgary, which could see price appreciation up until the end of the year. Nanaimo, Kamloops, Penticton, Calgary, all these smaller, more affordable markets could see price increases going until the end of the year. I mean, just look at this. Like, what is this? Median prices in Calgary are up 10% year over year. Pretty nuts considering rates are 5% higher as well. Building permits are dropping. They're going lower every month. More people are coming to the country every month, every day. And we all know there's going to be people who are forced to sell their homes, or at least just really want to sell their home when their mortgage comes up for renewal. The question is there going to be enough of those people to outpace the amount of people moving here? And with the lack of homes being built and brought to market, are these people who have to sell their homes going to be enough to actually provide enough inventory to outpace the demand to push down prices? That is the main question right now. And personally, I don't really think so. And if prices do come down, I don't think we're going back to those November lows. I don't think prices are going to come down very hard. That's my guess. I mean, even when I said prices would probably go down until the end of the year, I wasn't talking like 10%. I was talking like 3%, 4% type of deal, right? So overall, I'm not very bearish. I think there's a chance prices do come down, but if they do, I don't think it's going to be anything drastic. I think, we're getting towards the end of this rate hike cycle, and it's probably time to buy if you're thinking about buying. That's my honest opinion, realtor opinion. But anyways, that's it, guys. I appreciate you for watching. Please subscribe to the channel, like this video. I'm that 𝐎𝐓𝐇𝐄𝐑, and I'm making moves to move you. Peace.